Today we are here with Mandi from Wise Home Lending and Maritta. Well, you know Maritta. She's a real estate agent. So, Mandi, explain to us what some of these new guidelines that are coming out about lending.
Well, man, there's so much going on in the market. So let's go back up a little bit to foundation, right?
Okay.
Yeah? Okay. So, what creates interest rates? Do you call your lender and they just magically throw numbers out at you? Probably not. We hope not.
Oh,
No.
so I shouldn't do that.
Shouldn't do that, Terry.
Okay.
So, interest rates are driven by the stock market, like any other item that's traded. If you look on CNN Money, you'll see it MBS, it's mortgage-backed securities. So the market is driving what the market rate is at any given moment.
And that's a base rate, right?
Well, it's kind of.
Okay.
Having said that, so that's kind of a general rate. That's a kind of an item to follow, right? It's what investors want to pick up those mortgage coupons at. Okay. But you then have this other layer that is impacting the interest rate that the consumer receives.
Okay.
So you have Fannie Mae, Freddie Mac, and Ginnie Mae. Everybody hears about them in the news. If you don't know who they are, they're actually the governing entities that are basically writing the guidelines for mortgage loans in our country.
Did you know that?
I did.
Okay.
Did you, Terry?
No.
So the changes Terry's asking about are related to those guidelines, correct?
Right.
Okay.
So in the conventional world, Fannie Mae and Freddie Mac, right, they've come out and they've changed some things. So things that impact your interest rate or adjustments to a base interest rate are type of property, your credit scores, how much down payment you're using, things like that.
Mm-hmm. Whether it's a investment property,
Or
owner
primary,
occupied, second
yeah.
home,
Right.
condo.
All of those things are creating impact to your interest rate.
Okay.
Got it, Terry?
Really? It's not just interest rate for everything?
No, believe it or not.
So Terry, you cannot call a lender and say, what is your interest rate? Because it depends.
Sorry.
No, I hate that answer. It depends. We say it all the time around here.
Okay.
It depends. So, yes, it depends on all of these factors, which are considered risk levels for a lender,
Okay.
right? If you don't have very high credit scores and you're not good at paying bills, you're higher risk.
I'm pretty good.
You're great. I've seen your credit scores, Terry.
Oh, thank you.
783, you're killing it.
Yeah, it used to be higher.
Well, good job.
So, recently, there have been some changes to what those adjustments are and which things even have adjustments. So, before, and this all became effective today, by the way,
Okay.
just to make things interesting.
February 15th.
Right, February 15th, here we are. So, before today, if you had a 715 credit score and you were buying a primary residence and you were putting 10% down, you might have very minimal adjustments to that base rate, right? You might have an adjustment of maybe 0.125 or 0.25.
Okay.
Today, that's higher. It's more like 0.75, 0.875.
Which is significant.
Which is significant.
Wow.
However, before, if you had a 680 credit score and you want to do 5% down, the adjustment was pretty large.
Okay.
That adjustment went down. So interestingly, our clients in that 660 to 700 is actually going to benefit them,
Okay.
especially those who don't have big down payments. One of the interesting things that we saw is if you have a lower down payment, you'll actually have a lower adjustment to your rate if you have 5% down versus 20% down.
Does this mean more people will qualify to buy a house now?
Maybe. It
Cool.
depends.
It depends.
It depends, Terry. Right? We say it all the time. It's going to be interesting,
Yeah.
right? Another thing that is impacting rates now, debt ratios. Do you know what a debt ratio is, Terry?
Maybe you should explain it to me.
So debt ratio is how much of your gross income is going to servicing of your debt, right? So your car payment, your new house payment, your credit card, how much are those monthly payments in comparison with your gross monthly income?
Debt to income ratio.
Debt to
I
income
have no
ratio.
credit cards.
So you can, on a conventional loan, if you have good credit, you can get a debt ratio of 48% approved. But now, if that debt ratio is over 40%, you're going to see an adjustment to your rate. It's going to be a little bit higher on your interest rate. So definitely it looks like the industry is trying to make movement to help more people into affordable housing,
Which is a good thing.
which is a great thing.
Okay.
But they are also trying to have everybody keep their budgets a little bit tighter, be a little bit more conservative in what they do.
So who is this going to impact? So if somebody's got a higher credit score and was in those more favorable rates in the past, what are their options going to look like?
If they're over a 740, no major impact.
Okay.
But if you're in that 700 to 740, it actually was not in your favor.
Okay.
That movement was not in your favor. And you, before, maybe wouldn't have looked at an FHA loan, and it may make sense to do so now.
Right.
So, bottom line is, there's lots and lots of variables impacting interest rate. And that is a moving item, right? There's policies that are changing all of the time. Please take the time to provide your lender with the full picture so that they're giving you accurate information.
Nice. So number one, what I'm hearing, Terry, is make sure your lender understands the programs and understands the different options and has a wide range of options. You should always be comparing FHA versus conventional, along with any other state or local guidelines and programs that there may be available.
Got it. Absolutely. And when you call in and a loan officer starts asking you a bazillion questions, don't be offended. They're actually trying to help you and give you really accurate information. And so many of those factors are going to impact their answer.
So be open to that. It's okay.
Be prepared. It's okay.
When
They're
you're
not trying to
shopping
be
rates,
difficult.
when you're shopping rates,
Yeah.
it's not just, hey, call up, what is your rate? It's
Right.
call up, lots of discussion.
Yes.
Here's where you're likely to land.
Yeah, please know your loan officer's not trying to be evasive in answering your question. They're just trying to get more educated about what you need.
I love it, which is why we love Wise Home Lending and Mandi and her team, because they have so many options available and they understand the business so well.
Thanks so much for coming by.
Than's for having
I hope,
us.
Terry,
Thank
that you
you.
got some treats while you were in the office.
I did. Thank you very much. I
Very
appreciate it.
Very good.
You for always being kind, and thank you